Mr. Market has delivered its regular reminder again, markets don't go one way. Hi, my name is Richard Lee. Stockradar, we teach you the things you need to make your trading strategy work. Defining a trading edge, putting it into plan, applying risk management techniques, and in my case, all based around a simple piece of structured price analysis. In the end, you should be able to understand it, learn how to do it yourself, and maybe even do it better. I'm always here to support you. Basic Stockradar members are safe and okay at the moment, carrying only limited equity exposure, around about 15%, with still some canny trends like computer share, APA, ALD still, and ALX still delivering for us. We have been positioned correctly for this. The portfolio members are always geared up for an up move. This is not our most friendly, non-trending period, which has existed since last August, culminating in the recent blow-off. This is certainly our most important, our most difficult trading phase, as it is for most. We can only simply be patient and prepare for a new trending phase to return, as it always does, and as history shows, will be more than compensated if you follow the process. Equity weighting has been reduced in these portfolios as well. So stick with what we've got now and wait, control what you can. The risk has been on the rise for some time. But think clearly through this development of a whole new lower level of price opportunities. Where are the hotspots? Where are the prospects? Who do we avoid? Don't freeze, get active and ready. Okay, so that's my little opening comments for the moment. We're going to have a quick look at the markets now and see where they're taking us. It's been an interesting week this week, but there are certainly some things we need to know. Okay, so let's firstly go to the Dow Jones and have a look at this. They're all trending down, as you know, overseas. They're making new lows this week, so there's no real change there. Heavy volume, weak momentum, so still further downside in these markets yet. Nasdaq similar, although it's bounced a little bit there. Heavy selling. This is all very weak, below the average, and we've broken below the support here, so we bumped up and hit it and failed, and we're probably on the way down again for the moment. Okay, how far down? I don't really know, but at the moment the trend is down, and that's where the risk lies. Gold and copper, they're still trading that range, but they're also looking a little bit more, could I say, on the weak side. Is gold struggling here at the moment? We've got this jump in interest rates, this inflation rise, but gold is struggling. So it's within the trading range. The next few weeks might tell a bit of a story there. Okay, copper is probably the same. It's kicked off a weak rally from the lows of this trading range. It's failed and come back down and tested again. Not a good sign for copper at the moment. So that commodity complex is looking a little bit dodgy at the moment. If we go to Brent crude though, it's still a standout. And we look at all sorts of things regarding Brent crude. We see the trend here, the trend up, it's above the average. Volume is a bit indifferent. Momentum is good. It's been volatile, but it's up near its high. So the trend still remains up for crude. So although I know we're at this high area here, this historically high level at R2, so we get a bit of a battleground here. We've got a powerful trend pushing into this resistance level. At the moment, the trend is always a dominant force, so we hold force. We've had it up for a long time, so we've got to be wary of that. So we just really take each week as it comes, and at the moment it's still looking okay to me on Brent crude. Okay, let's go to the All Ordinaries now. Also the ASX 200. Yeah, we've certainly fallen through that support this week. In no uncertain terms, momentum's turned. So we're getting a bit of a resolution of this trading range here. So we're going to now try the downside, and we'll be looking for some support down here. You could see some down around 6,000 just above, but we really don't know at this stage. It's all a little bit about how much the fear is going to take hold. But those that think clearly through this mess will find some value. So we'll talk a little bit about that a bit later on today. So with the Stockradar portfolio, the whole portfolio is down 7 to 27 this week. So we've got 25 stock picks of 165 stocks covered and 2 ETFs of 21 stocks covered. So the conservative portfolio is down to 3 out of 20. That's also at 15% equity, 85% cash, as is the Stockradar big portfolio. The Energizers have come off. The 5 stock is now down to 3.5, 3 out of 5, and the 10 stocks now down to 50% exposure at 5 out of 10. So these are aggressively geared up for trend phases of these portfolios, always ready for uptrends. So these are difficult times, tough during corrections, but more than compensated by the upside, as we mentioned before. Okay. sectors to look for: utilities, energy, the strong ones still. Transport's getting a little bit better. Don't really know why, but they are. The sectors going bad have been consumer discretionary, awful. Consumer staples, metals and mining, diversified finance and banks, all disastrous at the moment. Already bad are the Telstras, the telecoms, internet, commercial services and supplies, health and industrial materials, all been awful at the moment. And so that's really not looking all that healthy at the moment. If you look at the trading centre on Stockradar, there's a lot of red there and not a lot of green. So that's where the Stockradar, that's where the ASX 200 sits, that's where the overseas markets are. So now let's go and have a look at perhaps a couple of stocks and see what we can see at the moment, because it is an interesting period. Everyone's got a bit of fear, it's a bit of concern, a bit of panic, but don't do that. That's the last thing you want to do. Think clearly through this phase. Okay. So, right, so that's where I'm going to go from there. Okay, now, so Woodside, I promised you this last week, and this has been a very tricky one, but it's the way the strategy works, so I will tell you. Okay, so we have a big bottom phase here. We had a big trend reversal pattern here, which broke up here back in February this year, and we've had a little bit of a run up here, but then all of a sudden disaster hit, and there's a lot of shuffling with this BHP shareholding, and it caused a bit of a sell-off here, and our stock actually went off here in May. But two or 3 weeks later, after some great volume, we're back on a new high. So that was a bit of a whip out, and that happens, especially at bottom phase, but we're back on track with this one. I know it's come back a bit this week, but if I look at it, step back and have a look at it, we are above the average, which is rising. Volume was very good on that uptick there. Momentum is positive, and this has been a breakthrough here. Nothing too concerned about at the moment. We always have a stop, of course, in case we're wrong, but we're back in here on Woodside at the moment with a hopeful tag on this one, because it has been a long time bottom, but things seem to be aligning for Woodside at the moment. So hang in there with that one there. Santos is another kettle of fish. All different kettles of fish, these things. But Santos, we saw it had a little bit of a sharp. We were waiting for the sharp rally. It came. It hit R1 bang on, and all of a sudden it's come back again. Nothing too concerned at the moment. We do have it above the average. Volume is very good on the upside. Momentum is strong. We have this resistance area, which we have come back from, so be wary. I would love to see it fall soon. Otherwise, if it doesn't, then we might see a bit more of a sell. So anyway, still positive at the moment for Santos. 10-10C rating is +9 and looks okay. Hang in there again. All right, Aristocrat. Now, I talk a little bit about opportunities today because that's what I'm going to look for. And there are some stocks that will be out of sync. There are some stocks that run with the market, some stocks don't. Aristocrat has a mind of its own. So we're going to have a look at this one stock today and just see what we can see in here, because we're always looking for these opportunities. It is down from $48 now down to $33, so we've got a nice reduction in price there. Okay, now we've seen this big trend up here. It failed, it broke, we sold out. We've watched it come back down. It's come back down to 50% level. Also around here, there's a bit of a support area around here, which we'd like to see. So it gives us 2 bits of evidence here. So that's a support area we'd like to see it hold at. Now it has come down, it has held there. The first rally off this low point here was on very good volume. The momentum is starting to, the downside momentum is starting to go out of the pressure, so there's interest at this level. Not that we're saying we're going to buy it, because we need more evidence because of our conservative approach before we do anything. But at this stage, we're putting the pieces of the puzzle together, and we've got the first signs. Support has been hit, and we can see some buying interest occurring at this level, so that's a good sign on Aristocrat. Still rating 20-10C -7, a long way to go yet. But this is what we do at the moment. We try and look for these things. And there's been a lot of selling on Aristocrat, so this can hold this area here. That's a very good sign. Okay, so that's Aristocrat. Okay, ASX, another one we would look at, because this has come down a long way. It has been coming down for quite some time, since August, the top of the market there. It made a new low here, a lower high, and now a lower low. And we've got this big S2 level down here, which is a pretty important level for the ASX. So this is a level that I'm going to watch. It resisted on the way up. It's held the market up on the way any pullbacks. So we've got this sort of trading range here. This was looking all very good here, but often it doesn't happen, and this didn't happen. So we had a failure here. It's come back down, but this is the area here down around S2. We're looking at around about $65 to $68, somewhere around this sort of zone. So that's the sort of level I'll be looking for ASX at the moment. Having come off from 95, now down towards 70. So we've got a good price reduction there. This is still negative here. Trend intensity rating is -1. Lots of work to do yet. Keep an eye on it. Now, BHP is another one. Unfortunately, this data provider hasn't updated the price. Okay, so I've got the wrong prices up here, these ones here, so I put in the right prices here, but I just want to get you for perspective, we're actually quite near the high, so I'm going to put up my own little BHP chart you can see off my website, and you can see here the current high is up around 47.50, this low is around 32.50, and we're currently up around 43.90, so we're not far from the highs. We've got a good bit of support here at $40. So again, BHP looks quite interesting to me at the moment. A little bit better than Rio, maybe Fortescue even, which we'll have a look at in a second. But it does look interesting, BHP, despite the commodities easing off. So we'll keep an eye on that one. Hasn't broken yet, so we'll just keep an eye on it for the moment. Coles. Another one we watched before, it tried and failed at this high here, which we've been watching. It's come down to here. Now we might have a little bit of support along this trend line here. There's only 2 points here, which isn't hugely valid. But down here, we've got a good support level, 1, 2, 3 times into this zone here. That's where we want support. If we're going to look for the market to get some support, that's where we want to see it. But for the moment, we can see the sellers are dominating this at the moment. So at the moment, no, trend intensity rating is only -2, so that's not too bad for Coles. So that's where we want to look for Coles. Okay, Goodman's another one. It's come off. All the property ones have been caned. This has come off from 26. It's now down around $17. But we're here. We've got the S2 level, which is staring us in the face. So turning things on their face. Don't worry about the fall and the panic and stuff like that. Hopefully you've done what you needed to do and you are prepared, like most Stockradar subscribers should be, for this moment to pick up some of these stocks at some good prices. We need support to be hit. We need things to happen after that happens to confirm it. But this is what the first step is to look for, is to find this support. At the moment, this is plunging on volume and on very weak momentum. So for the moment, trend intensity rating is -10, and not that happy at the moment, but we keep an eye on things. Okay, I didn't mention to you Fortescue before. It's a possible. Now, it's up around near its highs. It's holding up okay. At this stage here, we're seeing it's stuck between this sort of S2 level here, down around $14, and this level up here at around about, what's that? About $26. So we're in the middle here. But we've come off the highs here. We've found some support here, not so bad. Volume's declining a bit, which means that interest isn't a huge amount, and momentum is just positive but flat. So we're really in an interesting stage. It says resilient here, but not necessarily going up yet. So although it looks quite good, it's holding up. We really need to see a break of this R2 to really set this off again. So for the moment, it may come back to here, may come back to here, it may break above here. We'll just keep watching. It's stuck right in the middle, a bit like BHP and Rio at the moment. Okay, now Telstra's another one I want to have a look at. I'm just trying a little bit slightly different exercise today with you, because sometimes just trying to follow the process is an interesting situation for Telstra. So I've actually taken everything off the chart of Telstra, so I can actually have a look at what we've got here. This is the full history of Telstra since 2002, and you can see your highs up at 650, but we can also identify a fairly important low point down here. So if I just simply identify this by putting a big fat line right across here, that's our low point down here. Okay, so now what we want to do, because this is such a long-term chart, we want to focus in on what has been happening here. We've had a big downtrend here, it followed up, and I've been watching this for quite some time, and I've been looking for a break to occur here, which just has not happened up until now. I'll get this right in a second, don't worry. Oh dear. Okay, so here we are back down here, and you can see the trading range. This is how it looks at the moment for Telstra. Okay, there's your big downtrend. Here's your big base. You've at about 255, 256. Here's our resistance up here. Now, we had a pretty good trading range here, and we look for this to bounce off here with a good reversal, which sent us straight up to here. But it's got up to here and it tried to break through and looked very good, but then it failed again. So what I'm going to do now is I'm just going to identify these resistance areas here as main resistance areas for Telstra over the last couple of years. Okay, so we've got our main support area, our resistance area here, and we can see that the recent trend up from here has well and truly broken down. Okay, so we've now got, it tried through here, it failed, it's come back, it's made a lower high and now a lower low. So once again, we could see this sort of levels. Now this is almost unimaginable for a lot of these stocks to hit these support levels, but surprise, surprise, some are getting very close already, be it Goodman or ASX or whatever. So Telstra, I don't know what's happening there. They can put their foot wrong sometimes and things can go awfully wrong and prices can come down. For the moment, it looks like the risk is on the downside for Telstra. Just by doing a bit of simple analysis here, if I was going to run kind of trend intensity over here, I would look at the trend is down, which is a negative. It's below the average, which is a negative. Volume is pretty flat. I'm not going to give that a real rating, and momentum is pretty flat. So I'm going to get a trend intensity rating of probably trend maybe -6 to -7 on Telstra at the moment, and that means it's a no-no. But that's very simple analysis here. Could come back to here. If it breaks through here, then I'm very interested. So we'll just have to wait and see what happens with Telstra. But for the moment, this has been a pretty large failure up here. Okay, so that's really some of the stocks I want to look at. The energy stocks, which are becoming a little bit mixed. Some of the opportunities like Aristocrat, ASX, BHP, Coles, Goodman perhaps, even Fortescue. Now to have a couple of looks to blow the trumpet a little bit. Some stocks like Aristocrat or Computershare seem to ignore the prevailing sentiment, and I can't explain why, unless they're very good stocks. But Computershare's had a huge rally this week on the back of I don't know what. But it's all I'm really interested in is the price movement. So we've had a big trend up here from entering around about $15. It's got up to 26. It's come back a bit. We've had our stop in here. Okay, somewhere in here. For Stockradar members, you can go and see where the stop is at 01. We've had a good rally here on a bit of volume. Momentum is still positive. It's above the average. The trend intensity rating is still +7 on Computershare, and it's still been going up. So that's a very good sign. The other resilient stock I want to look at is APA Group, which I've followed for a while. It has stalled for a few months under this R1, I know. But it seems to be, apart from a couple of red bars here, all these green bars are finishing up on the highs each week, which is a really good sign of support. So I quite like what's happening at APA Group. How the price action is developing. It's still got a trend intensity rating of 8. It's +8. Trend is up. There's been a bit of selling here. It hasn't done too much to the price. Momentum is well up. So this has got a strong trend intensity rating, APA. So there are some still good stocks out there we can hold on to. There are some prospects that we could look at, and there are some stocks that we don't want to touch. So it's a bit of a, you've got to think clearly through this market as to where things are. Okay, so now I'm going to go to trading tactics. Talk a little bit about what we've seen. ASX stocks, what to do next, okay? You've got to pick your targets and be very, very careful about it, okay? As you say, when you get the bottoms of the market, not every stock bottoms at the same time. There are differences in situations. So they will bottom at different times, just like COVID. We've got some good entries at the bottom. So it's just a matter of picking each one, taking each one on its merits. I am a bottom-up trader, not a top-down, okay? So picking your target, what's your process, okay? So how do we do this? Firstly, our mindset has got to be right, okay? And it's difficult in this sort of environment. If you're watching the market every day, you're probably going crazy. If you're not watching the market, you've got a chance, okay? You don't need to watch the market. You don't watch your house price every day. You don't need to watch your share price every day. Just keep an eye on them every week and you'll be okay. So are you being patient, okay? Are you thinking clearly? Okay, that's important, especially at the moment. Are you following your processes? Are you ignoring market chatter? They're the key things to get your mind in the right place. If you are, yes, good boy, good girl, that's fantastic news because you're thinking clearly. And I do find often that women are far more poised than men in these situations. Men tend to be a little bit more Americanised, a little bit more upbeat, but the women seem to be able to think a little bit more clearly through this. So there's a challenge for you blokes. Okay, just really, what do I do and how do I do it? Firstly, I mentioned to you before, a simple generic process of what I'm going through now that stocks are coming off. Firstly, I'm going to look for evidence of support. Okay, I want to see a stock getting supported, so buyers are starting to balance out the sellers. Okay, the second step is it says follow through. Follow through means the buyers have got to show more interest in the sellers, and I've got to have evidence of that. Okay, whatever your process is for evaluating that, you know what my process is: building evidence, using support, using moving averages, all this sort of stuff. So I'm assessing the follow through once support has been hit, like Aristocrat at the moment. I'll be assessing this follow through. It's still early days. The trend intensity rating is still -7, but we'll start to. Okay, and once I've done that, I'm also going to identify a trigger, like a trend reversal trigger. When I get that initial rally, that's when my trend reversal trigger goes. So there's a step 1, 2, 3 that you should go through. You'll tick those boxes, then you'll get set, and hopefully you'll be able to ignore the market environment that's going on around you. So now fill in your process. Okay, for the first step, define your support. What is step 1? How are you going to define support, or what's the evidence are that you're going to say this is in the buy zone? Okay, second step, what's your required evidence? What evidence are you going to build to say this is more likely to happen than that? Because that's what it's all about, this probability, okay? And the third level is define your trigger. What is going to tell you to go? Okay, so you need to have that in place. So when it happens, you know what to do. And that's really important about all these plans and processes. You know what to do. Okay, so that's just a very simple thing about picking your targets at the moment. Try not to be too concerned about the market. It's not going to go back to zero and never come back again. It always rises, it always comes back, and it will do once again. So, pick your targets. Don't hope. Base your decisions on fact, not fiction. Okay? So don't worry, don't think, don't concern, don't panic and think I should do this, I should do that. Look at what's going on. Don't be this guy who doesn't know what to do. He's question. Always know what your next move is going to be, and it's vitally important when you are trading stocks. Okay? So, I am a glass half full type of guy and always the optimist, and of course my business depends on it. But the reality is the stock market goes up most of the time. Okay, and if you look at the long-term chart of these things like GFC are squeezed into almost insignificance. Okay, so catch me if you can, says Mr. Market. Those on the ball will catch him. The frozen and the paralysed won't, and that's what happens to a lot of people at these sorts of lows. Don't get frozen and paralysed. Look for the opportunity. This is a natural market phase, and we need to deal with it as per our predetermined strategy with cool, calm, and disciplined behaviour. Okay? It's hard, but every market deserves the same respect and treatment, be it a bull market or a bear market. So now, look forward to the emergence of an exciting bunch of new prospects, so be prepared, okay? Stay safe, watch your trends, heed your stops, and I'll see you all next week. Thanks very much.